Hey guys, Mohsen here, and today we're doing a fun video. So we're going to be reacting to the 2008 stock market crash. So let's jump into it. So let's see what happens.
Apple's up more than 6% right now. Google about 3%, but Dell Intel Research Motion.
Everything's pretty before it gets bad.
Look how strong.
Did not disappoint. 400 points higher. Yes, indeed. The market's more higher. Last 30 minutes of trading.
Everybody's happy.
Most of the techs this morning, if not all of them, have just exploded to the upside.
For some reason, it's always the tech that leads anything that happens. So this isn't the actual Black Monday. Black Monday is in 1987. It's just Monday is the day it started. I didn't know this. There's a problem with the opening bell. I actually wasn't trading at that time. I started just after the 2008 crash, so I didn't live through this. When I started trading professionally, I met a lot of people who lived through it, but I didn't.
7% here, loss of 37 points or so. Apple shares
So
are
we're
just getting
starting.
hammered this morning.
We're down by between 3 and 4.5% generally across these markets.
Okay, so when a whole market is dropping over 3%, that's huge. Like if a stock is dropping 3%, it's nothing. But if the whole market, if the average of everything is over 3%, usually if the market is dropped by 2%, there's something going on. But 3%, like that's huge.
Let's talk about the
Like 2% happens, but it's very big.
We're red everywhere, essentially, down by 4-5%. We're down over 16% down at the same.
Okay, 16. So here, I don't think she's talking daily. Maybe that's like the second day. Let's take a look at the biggest losing days in the S&P 500. So largest daily changes in S&P 500. So the index for the S&P 500. Largest point, no, let's check largest percentage losses. Okay, so the biggest daily loss ever is 20%. And that was in 1987. So that's Black Monday. Here we go. Black Monday. Largest losing day. After that, 12% loss, 10% loss. These are huge days. And these were all in 1929. So 1929, you had like 10 big losing days in a row, and that caused the Great Depression. And then after that, I don't know what happened here, 2008. So 2008, one of the biggest, and 2008 again here, 9% was one of the biggest days that happened, which is pretty huge. But the thing with 2008, it was consecutive losing days, I guess, in a row. Okay, so let's continue.
Time has fallen about 18%. The stock market is now down 21%.
Life is hard sometimes.
We're now down 43%.
What in the world is happening on Wall Street?
2-year no yields.
You know, sometimes when you're looking at like cryptocurrencies or like riskier, I guess, asset classes, and you're like, these things are too risky, but even stocks can be super risky. Imagine you're retiring, you have all your funds in stocks, and a year before your retirement, this happens. And you lose 40% of your capital. Like, life isn't easy.
From 190 to 166
There's always risk.
in the blink of an eye.
I have never live looked at the Dow Jones Industrial Board and seen a 600-point loss.
Who knows where this is going to end up? I mean, this is volatility we haven't seen, of course, since way before you and I were born, even before our grandparents, 1929.
You know the bad thing about all of these guys? They're probably heavily invested. All of these anchors and reporters that are working at CNBC and all of this stuff, they must have like such a hard time reporting on this while like knowing they're losing so much money.
So almost everything there completely wiped out. And the NASDAQ, everything and more has been completely wiped out.
The Dow traders are standing there watching in amazement. I don't blame them. The credit market.
676 points down.
It was the worst day on Wall Street since the crash of 1987.
From the financial capital of the world.
Well, it wasn't worse than 1987, but...
In 5 seconds, and to be honest with you, we wish it wouldn't.
Do you hear what this guy said? He said the bell's gonna ring in 5 seconds, and to be honest with you, we wish it wouldn't.
Say a lot of their customers are freaked out, waiting to see how low the Dow will go. They're focused on the Dow, not so focused on OPEC. Yes, OPEC did cut production by 1.5 million barrels per day,
really you're seeing just broad-based declines across all of the major technology sectors. Apple's under pressure. Yahoo down.
Man, I wouldn't want to run a tech company during that period.
10%.
And we're not getting the bid wanted. We're not getting the stop trading, and we see where the buyers are. We're just every day they're pounding it.
Is it me, or did Kramer not age at all in the last 12 years? Seems he always has the same face.
The heightened financial turmoil that we have
Ben Bernanke too always looks the same.
will lengthen the period of weak economic performance and further increase the risk to growth.
Can't look at it after you buy it 'cause it's so horrible.
We haven't seen anything like this probably since the Great Depression, I think it's fair to say.
We've had an 8-day losing streak in the Dow that in percentage terms puts it on par.
Like, what do you do when you have a portfolio and you're down 40%, 50%, and you're retiring in a year? Do you like take your losses and move on? Do you like wait and hold? Like, it has to be like hard decisions.
The loss suffered in that crash in 1987, close to that percentage loss those 2 days in 1929.
Look at the move in Aussie yen just this week. This was 1 week, Maria. This market took 5 years to go higher. It's now.
For active traders though, they must have made so much money during this period, because the more volatile the market is, the more opportunities there are. You know, you're shorting, you're going long, you're doing everything. Oh man.
Down 40%.
What started in America last year has now spread to every part of the world.
We're down 9% today. The Xetra DAX over in Frankfurt is down by 9%. The Paris market.
Let's actually take a look at the S&P 500 here. So 2008 crash started here and went all the way down. Let's see here. Went all the way down to about here. So about a 50 or even a little bit more, a 50 or 60, 55% drop about. So a crash, usually a crash is a drop when the market drops over 30%, but a lot of times it drops more. There was the 2000 tech bubble crash before, so this is the one here. So that one was also about a 50% drop from top to bottom. So in 2002, tech bubble crash, damn, tech companies didn't get a break, huh? 2002 tech bubble crash, we dropped by 50%. 2008, we dropped again by about 55%, maybe a little bit less, but around that. And then ever since then, this is the fun part. This is the fun part. Ever since then, look at how much we've went up. Now we're at all-time highs. Never been this high. And we're in November 2019. Okay. Now imagine we have a crash now. Imagine we drop by 50%. How much is 50%? This is how much it is. So if we drop from where we are now, there is so much that can be lost. Like, look at this. Because that's usually what a crash would entail. You know, when you lose, let's say in 2002, dropped, then it took to recover everything that it dropped. It took from 2003 to 2009 about 6 years. And in 2008, it went from 2008 then all the way up to 2013. So another 5 years for it to recover. So if you're holding positions in the stock market right now, imagine we crash. Then you gotta wait 5 years or 6 years just to like recover what you lost. Imagine you don't do that. Imagine you sell all your positions, and when it drops, you re-enter, and you're able to enter twice as much more positions. So you have double what you had. And then when it goes up, then you're doubling again because it's 100% from here to there. So that's a lot of money you can make by avoiding this. But again, is this gonna happen now? Nobody knows. Or are we gonna go up another 30%, 40%, 50% before crashing? Like, nobody really knows when it's gonna happen, right? But what we do know is isn't this a reaction video? Why am I getting all technical here? But what we do know is it is gonna happen at one point. Because usually you have a crash on average in the US, every 6 years. Now this one, it's been now 11 years, which is the longest period ever in the US stock market history where we didn't have a crash. There's risk here. Like, for me personally, I don't have any long only stock positions because I'm scared of a crash. But I haven't had any long only stock positions for over a year, even a year and a half. Why? Because I'm scared of a crash. But it still didn't happen. So like, I can be scared of crash and be wrong because it takes another 5 years before the crash happens. Like, I don't know. It's just, I'm scared of it happening while I'm there, so I want to minimize risk. It might not happen, but I'm not taking the risk that I am invested, and it does happen. So it is a risk. I'm actually interested for viewers of this video. Are you guys, do you have stock long only positions, like investments, long-term investments, not just trading? And if so, are you doing anything to protect yourself in case of a crash? Do you think there's gonna be a crash happening? Let me know down in the comments. I'm really actually interested to know what people think about this, because I am kind of scared of it. Anyways, back to the reaction.
Austria, which was briefly suspended earlier on in the day, is down by nearly 11%.
This market is as volatile as you'll ever see.
Traders say this is the craziest day they have ever seen.
I wish I traded during this.
Traders saying they've never seen
I wish I was old enough to trade.
prices so fast, so furious.
Cicero was right. We're in the last days of this country's survival. And how in the world can we find the billions of dollars that we're borrowing from China and Japan?
Well, we are just seconds to go until the start of trading at the New York Stock Exchange, and stocks are set to kick off lower, a whole lot lower.
eBay is down 6.5%. And really,
Oh
you're
my
seeing
God.
just broad-based declines across all of the major technology sectors. Apple's under pressure. Yahoo down 8.5%. Cisco 6.5%. Research in Motion 10%.
This could be the most serious recession in decades. And that means life, as most Americans know it, is about to change, in some cases dramatically.
Oh man, that's not fun. So guys, what do we learn from this? Well, we learned that a stock market crash can happen at any moment, and it's not fun. And if you're an adult, you gotta start thinking about these things. How do you diversify? Where do you put your money in? When to reduce your risk? And just look at global, or I guess overall economy. So you can look at like LE, leading economic indicator, coinciding economic indicator. Look at indicators that might help you in predicting if something's gonna happen or not. And just try to reduce your risk. If we're up all this, maybe you wanna just put in something less risky. Maybe not tech stocks at the moment. But again, I don't know. I'm not invested right now. Let me know down in the comments what your views are. And let's see what the next few years are gonna show in terms of stock market growth or crashes. That's it, guys. If you like this video, smash the like button. It helps a lot with the YouTube algorithm. And if you want to watch more videos, I'm coming up with weekly videos. So hit the subscribe button and the bell icon to be notified as soon as I post one. And that being said, I'm going to see you in the next video.